Greetings and welcome to the newest episode of the Rice Crypto Show. I'm your host, Rice, and today I have a very important and informative show for you with returning guest Lynette Zang. She is the Chief Market Analyst at ITM Trading, and I will include a link down below in the video description and above for the playlist that I created with all of her previous appearances. Today, we're going to be talking about the fact that the foundation of our debt-based monetary system is cracking and can break at any point. All right, ladies and gentlemen, joining me on today's show is a returning guest. She's been on the show so many times that I can't even count that high. She's been joining me since the year 2018, about mid-2018. She was my second interview on the channel. Lynette, welcome back. How are you doing today?
I am very happy to be here, Chris. Thank you for having me as always.
Well, I appreciate you. And to give you a proper introduction, I am joined by Miss Lynette Zang. She is the Chief Market Analyst for ITM Trading. We'll have information down below in the video description so you guys can check out the ITM Trading website, the ITM Trading YouTube channel, which I'm going to get this stuff pulled up on screen so everybody can see this. And again, these will be linked down below as well. And we're going to be talking a little bit about the Treasury Bond situation going on. The other thing I wanted to bring up and share was the beyondgoldandsilver.com website. And there is a YouTube channel, and it exactly is what it says, Beyond Gold and Silver. It's all about Lynette's mantra of food, water, shelter, energy, security, barterability, wealth preservation, and community. So thank you so much for coming on with short notice.
As soon as I was asked, because it was you, I said yes.
Well, thank you again. And thank you to Jacqueline. And the video that I did, we're recording this on the 24th of October. It's Tuesday, the 24th. Yesterday, I did a live stream on Monday, the 23rd. And this video will be coming out Wednesday, if that's not confusing enough for you. The video that I did on Monday was playing about 14 minutes of a live stream that Lynette and Eric from ITM Trading did this past Friday. Normally they do these live streams where they take calls for, or not calls, but they take questions from various different people in regards to asking questions that are ITM viewers. And this particular week, they didn't really get to any questions because Lynette wanted to cover the Treasury bond market situation because it didn't seem to be like any questions in regards to the Treasury bond market, which from what I understand is the foundation of this entire debt-based system. So why do people need to worry, Lynette?
Because it impacts every single person. And you are absolutely right. The 10-year Treasury note is the foundation of the global financial system. And it's going like this. Its price action is going like this because there is no liquidity. And there's no liquidity because the smart money, so we're talking about commercial banks and governments and global central banks, global governments, and even our central bank, the Federal Reserve, has stopped buying the treasuries, and they are transferring the risk from the few, from those guys, to the many. So to the mutual funds, to the pension plans, to the insurance companies, et cetera. Or when you make your deposit in your 401k and you're giving it to institutional investors that invest your money, this is the final piece. And I can't sit here today and tell you, Chris, that you can't wake up tomorrow morning and have the whole system collapse. Because what's happening is that the financial system is built on a fault line, on an earthquake fault line, and the earthquake has begun. And they moved it in there. You can see it. Do you have the TYVIX that they took away from us in 2016 by any chance?
Me?
We'll send you that chart. Will you mark that down, Marie?
Yeah, and I can throw it in the edit 100%.
Yeah, absolutely. But what you will see is prior to 2008, the price action of a treasury looked like a dash, which means it just didn't move that much in any given day. So that's a solid foundation. But when 2008 hit, what was once a dash became a small line up and down, which indicates price action is starting to move. And then in 2013, they handed over the Treasury market, the foundation of the global financial system, to traders.
In 2013?
In 2013. And
What
then
was I was gonna say, what was the reason for that though? Why would you hand off something that's supposed to be a safe haven asset that most people are using as a safe haven and give it to the market, which the market doesn't respect safe haven? Safe haven means no profit.
Exactly. Isn't that a good question? But what did they show you was most important? The profits of the banks, right? And really, when you look at it, it was the shift into derivatives and pushing everybody into massive bets. That's what a derivative is. It's just a big unsubstantiated bet. And so the whole system, I mean, this goes back so far. Once we went into a debt-based system, I'm going to breathe here for a second. Hold on. Okay. Once we transitioned into a debt-based system after 1971, they began the financialization of the markets. They concluded turning everything into a financial product. So including real estate, including, obviously oil, water, everything, not just gold and silver, but everything has become a financial product. And it should have been made crystal clear in 2008 that the entities that were deemed too big to fail were the banks and the bank profits. And if you look, the Office of the Comptroller of the Currency, the OCC, does a quarterly report on derivatives in FDIC insured banks. And you can actually see, if you go through that report, you can actually see how the trading profits became, especially once they pushed interest rates down to zero. Well, the traditional way that banks made money was essentially gone once they pushed those interest rates all the way down. So the banks had to make money, and most of their profits come from their trading operations. So why did they give it to traders? So that banks could keep making money. That's my opinion. I can't exactly prove that, but you can see the progression. And then in 2016, they took the TYVIX away from us. Nothing to see here, folks. I mean,
now is it TIVX or TYVX?
There's a dollar sign and then TYVIX. And that is the volatility. And I don't know if you can even pull it up anymore because they took it away from us in 2016. But fortunately, I had captured a print screen of it. So I use it all the time, and I'll get that to you. And it's so obvious. It's like watching an EKG, a heart attack happening. And in 2015, you remember the flash crash in treasuries, where the liquidity in the market, boom, evaporated just that fast. And since 2015, we've had a number of crashes and lack of liquidity in the treasury markets in the foundation of the system. And now we're at the point where those that were providing that stability are saying, bye-bye, good luck, we're out. And they're leaving it to the public to pick up the slack.
China and Japan, from what I understand, as far as foreign countries, are two of the largest holders of the treasury bonds. And China last week were selling off treasury bonds in U.S. stocks, if I'm not mistaken, correct?
No, you are absolutely correct. That's what I'm saying. Yes. See that? That's absolutely correct.
And this was last Thursday.
Right.
Last Thursday, this happens. And then Friday, reported on CNBC, the 10-year treasury yield just crossed 5% for the first time since 2007. And here's what this means for you. What exactly was the big deal about the 10-year yield, treasury yield crossing over 5%? And why is nobody really talking about it?
Wow. What the big deal is this is your foundation. and your foundation is crumbling. And do the markets, does Wall Street, do the central banks, do the governments really want to know that it went from 0 to 5% in a heartbeat of a minute, just a few months, very, very rapidly? Because, oh, I think I put that away, darn it. But anyway, these are interest rates. This is the principal value of the bonds. Remember what happened with the regional banks back in March and April, Silicon Valley Bank? Okay, so we've been in a 40-year downward trend in interest rates. So as interest rates go down, the market value of the bonds go up. So if you have some bonds, if you're holding that in, say, your IRA or 401k, you've got it in a mutual fund, right? Even if some bonds go bankrupt and go bad, you can't see it because the market value of the ones that are remaining are up. But the reverse is also true. So the Federal Reserve and the global central bankers, by rapidly raising those rates, have done just the opposite, and they have popped the debt bubble. I mean, how far below 0 can you go? And you remember that was tested. And they want us to believe that that's, that going below 0, going to negative rates is a choice. Well, okay, I'm going to go out, work my butt off, loan you money, take that risk, and accept getting back less than what I gave you to begin with. Yeah, that's a good choice. I might do that for my kids, but who else am I going to do that for, right? So what has happened is, remember, interest rates, market value of the bonds. So what's happened is the value of all of those bonds that are held in commercial banks, that are held in central banks, that China just sold off, right? They are underwater because they bought it at 0%. And now the 10-year Treasury, the foundation of the global system, went from 0 to 5%. And the value of all of those bonds are in the toilet, including all the value of the bonds that the central bank itself, the Federal Reserve, is holding. So Bank of America says, oh, yeah, well, we don't expect to take any losses on, the bank gets to determine if these are held to maturity, right? Then they don't show that loss. But if there is a run on the bank and they're forced to sell those securities, well, we saw what happened with Silicon Valley Bank and all those other banks, those regional banks that went under. So they want us to think that everything is hunky-dory in the banking system. It's not. It's absolutely not. And the volatility, which really indicates the ability to buy and sell the Treasury bonds easily without moving prices.
So did the Treasury bonds have anything to do specifically with the bank failures that we saw around March of this year? Because 100%. the way that it was, it because their principal was locked up and they didn't want to take a loss, or was it because the principal was devalued due to the inflation?
And because there was a run on the bank, and it wasn't the inflation, it was, well, it was indirectly the inflation, because in theory, here's the theory, that when inflation is running hot, there's too much consumption, there's too much debt creation, they raise interest rates, and that slows down people's wanting to borrow more money, right? So that slows down inflation. And they've made it kind of look like it's working, but not really. So what happened with the regional banks is there was a run on the bank into this market when their assets that they were holding, the Treasury bonds, were way underwater, and they were forced to liquidate at a huge loss
to be able to cover those deposits.
Exactly.
Okay, that makes sense.
Yeah. So, and for anybody to think that those same losses are not at Chase, Bank of America, Wells Fargo, Citi, Goldman Sachs, the Federal Reserve, or the Bank of China, or any agency that is holding treasury bonds that they had 15 years of zero interest rate policy.
Yeah.
So all of the debt, the tremendous amount of QE debt and all that garbage that they were creating, guess what? That's all severely underwater. And what are we being told by the Fed? We're going to keep it higher for longer. And why are they doing that? More than any other reason, this is my opinion. I cannot, guarantee this. But the central banks, it was June of 22, June of 22, when they handed over their credibility that the markets could count on the Fed. I'm going to back up to move forward.
Okay.
After the crisis in 2008, the central banks started to use forward guidance. So in other words, telling Wall Street what they were going to do, and then Wall Street would get into a position to profit from it. And that worked really well up until June of 22, when the Fed had been telling the markets, and the Bank of England had done it just a little bit before that, and then second was the Fed, and came out and kept saying, we're only going to raise rates 50 basis points, 50 basis points, 50 basis points. And then without warning, they raised them 75 basis points. Now, that may not seem like a big deal, but that is a huge deal in these trillion-dollar markets. And what the Fed actually did, and prior to that, the Bank of England, and after that, the ECB, the European Central Bank, was they told the markets that they could no longer count on that forward guidance. Banks have made a tremendous amount of money using forward guidance before that. And all of a sudden, that key tool, the markets now could not trust the central banks. And this is a Ponzi scheme. It requires confidence. And they gave, I did videos when they did it, and I was incredulous that they would have given away a key tool. And I said after that wait until they fight to get that credibility back, because that puts us in an even more dangerous situation. So the markets no longer trust the Fed. And the Fed is fighting to get its credibility back. And so now, instead of don't fight the Fed, remember that mantra, don't fight the Fed, right? Now the mantra is you can't trust the Fed, and we're fighting them. And are the markets stronger? Can they overwhelm the Fed? And the answer is yes, they can.
Well, when you talked about the forward guidance thing, it makes sense, because when they talk about the market having like the interest rates and things priced in, that's where they have that forward information, and they can. So, but if they're given some different, if what FedPal does in this particular case is different than what the market is stating, the market is going to react, right?
Exactly.
And normally, if it's worse, it's going to be a lot worse on the markets because it's not priced in. So you're going to see a lot of downward action, which, looking at the markets right now, it's just, I know, like, as much as I've interviewed you, this is like, and I've said it before, it just seems like everything is coming to a closer end, and it just keeps lingering. But you were even saying to Eric, when it came to like the T-bills, the 3-month T-bills, that do you really even trust that the government will be around in 3 months? That's how bad the situation is.
Exactly. Because this is a house of cards that's built on top of an earthquake fault. And the earthquake is happening now. Now, look, a big part of the problem are all those derivative bets that were created on interest rates. It's something like 80 or 82%, something like that, are interest rate derivatives. And they have to be exploding all over the place with that rapid rise in interest rates that Wall Street was not anticipating. But the guys that create these financial instruments are also the guys that keep them. It's such an opaque market, and they're the ones that deem a default or not. That's the fox watching the hen house and deciding when they're going to eat the eggs and the chickens, and nobody gets to know this.
Well, it sounds like these Wall Street guys don't even understand like simple economics. Because when you have all this money being printed that we saw taking place in 2020 and 2021, what did people actually think the consequences of all that money printing was going to be?
Free
It's
lunch.
it. I mean, to me, it's self-explanatory. So I understand that the markets have been propped up, but it's at this point, it's like, we need to kind of come back to reality. And that hasn't really set in. It's seemingly
No, it
starting
hasn't.
to set in a little bit now with we're seeing with the pickup with the Treasury bond market. If the Federal Reserve was to continue raising interest rates, because they're talking about raising at least one more time this year, how much effect is that going to have on the Treasury bond market? How much is it going to have on these banks that are underwater that haven't already failed?
Oh,
Because
they most
I
of them
feel
have
like there's a
not
lot more
already
bank
failed.
failures coming.
Yes, exactly. You're exactly right, Chris. And they were not ready for us, the public, to understand. And actually, would you write down there? I'm going to send you a clip from a recent FDIC meeting where they were just laughing about the fact that the public is going to be bailed in and that they can't see it coming. Do you
I've seen
remember
that. I've
that?
seen, yeah, no, I've seen it, and a lot of people were actually putting that video out, saying it was like somehow leaked out to the public, but that was actually a public meeting on YouTube. It wasn't. It wasn't. It was, and they were talking about. It wasn't necessarily what they were saying. What they were saying sounds very relevant to what we're dealing with today, but I don't think that's what they were specifically talking about. It was more so of like, I think it was a kind of a scenario of what if this happens, and that came out, I think, about a year ago, if I'm not mistaken.
I think you're right about the timing, but I don't think it was a scenario. I think it was an anticipation, and they were laughing at it. I watched that whole
Right,
3-hour
I've seen it.
video.
Yeah, okay.
Yeah, and
Well, right
they
around that time period too, that's when well, a little bit before that, the FDIC started coming out with their little commercials talking about banks are safe. Don't take your money out of the bank.
right.
Should be accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
So back in March and April, did they want you, were they ready yet for you to realize that you were going to get bailed in? That would be no. And so even though, don't call it a bailout, they bailed out. And who got bailed out? Oh, hedge funds, which are the ones that are participating in the Treasury market right now. Silicon Valley, who is creating really, I mean, they're huge, right? Apple and all these guys, and they're creating relationship to basically control this surveillance economy with the government. That's something I've talked about a while ago. So they bailed out their friends because they didn't want you to realize that you are the next in line to be bailed out. And there's no money in the FDIC. So they went through this back door because we were also dealing with the debt limit at that time. So Fed Chair Powell went to Janet Yellen, the Secretary, and Treasury Secretary, and borrowed for the FDIC a whole bunch of money that then did not show up on the balance sheet. So 1.7 trillion deficit, maybe. Maybe it's way worse than that, and we can't see it because they use all of these keen accounting tricks. This is a house of cards that was built on an earthquake fault line, and it is erupting now. And I cannot tell you exactly the second that it will become visible to the public, but what I can tell you is when that happens, you have lost all choice.
Yeah, it's gonna be too late. When you find out, when the general public finds out, it's going to be too late. It's going to be no paddle up, up Schitt's Creek, basically.
Exactly.
So the house of cards that you're talking about, was this built intentionally?
Yes, of course it was.
So when all this stuff crumbles and comes to an end because we have these bank failures, the FDIC has no money, they're not going to be able to back up all the money because that would just bankrupt the entire nation. So is this where
sorry,
you talked
Chris,
about surveillance?
The entire nation is already bankrupt.
I figured that for a long time, actually. Surveillance economy, you mentioned that. So is this a way to introduce the central bank digital currency?
100%.
So they're not going to be able to bail out people because they're going to eventually bail out the people. They're not going to let the people lose their money in the banks with the bail in. So I think they'll replace. I think they'll get
really?
people back.
Are you sure about that?
I don't. Then I think our country would be at war with itself.
Yeah, think. I honestly can see a revolution that has already begun. Look at the rise of the workers. Look at what's happening with unions. If you look at a graph on unions, you see them go all the way down and now it's picking up. So power to the people. I hope that this is not, I would like it to be a peaceful movement because we vote with our wallets. So if you keep your money in intangible assets, well, guess what? You don't hold it, you don't own it, and it is easy to be transferred away from you. That's why physical gold and silver really outside of the system, held by you, you hold it, you own it, it runs no counterparty risk, and it is virtually invisible to the powers that be. That's why if you look at the chart on spot gold, what do you have? You have a triple top. That means it goes up to a price and then cuts back, up and down, up and down. But that's because a rising gold price is an indication of a failing currency. And once you actually get that this currency is failing, you make different choices.
Yeah.
You make different choices. Do they want you to pull it out of the system? Hell no. They want it in the system so it can just fail. And who are you going to call? What's your recourse?
Well, Eric said Ghostbusters, apparently.
Yeah,
I love that answer. I thought that was hilarious.
But yeah, they have a really good, memory with that. But even Ghostbusters is not going to has not resurrected over 4,800 currencies that are still around. And hey, this is a million Bolivar, Venezuelan Bolivarina, right? And it has more value as a napkin for an empanada than it does as something to convert into goods or services.
I think I showed you
it's no different.
There was a video that I had put out from the Bitcoin conference in 2021 in Miami. It was the first year I was there, and somebody had rented a trash can, a big, huge blue dumpster, the long ones, and they filled it up with a little bit of trash, a little basura, but they had a bunch of $50 Venezuelan bolivars, and it was full of it. It was full of these $50, like it would have been a lot of actual value at one point in time. It costs more to rent the trash, the actual trash can than it did to buy all that money. And homeless people, and there's a lot of homeless people in Miami, they didn't want it.
Exactly.
And it was making such a statement, and I knew that would, because of listening to people like you, listening to people like Gregory Manarino, listening to people like Gerald Salente, George Gammon. I mean, there's a lot of people, G. Edward Griffin. There's so many people that have taught me over the years that I know that situation that that was experienced in Zimbabwe and Venezuela is something that we're going to be experiencing all around the world.
Exactly. Exactly. And this is a global issue. To your point, it isn't just the US, it isn't just Brazil or Argentina or all these other places that are experiencing high and hyperinflation right now. This is a global issue. And that's what the battle is. And that's why community that we were talking about before, community is critical. Growing that community. And I realized something the other day. It was a hard day, so I was out by the pond and I was kind of relaxing. And I know that the reason why I was put on this planet was to have a positive impact on a lot of people. And what I realized is that that's why we're all put on this planet, right? To have a positive impact on a lot of people, but you do that one person at a time. We're the 99%. That's way more than the 1% that has been robbing us.
Oh, it would be real easy to change the world if we could just stand together and we start treating people how we want to be treated. It's getting to that world.
What a concept.
And what you've been doing, I mean, it's to give an example of the chain reaction. And I know this has happened in a multitude of ways, but just in a micro level. Me watching you, we develop a relationship. We start doing interviews. I start getting people who never heard of you to be able to check out your stuff. Vice versa, people who are looking for your interviews find my content. So it's a way for us to be able to spread that positivity, because I do. One of the biggest things about my channel is this idea of practice change, of being the change that you want to see in the world. You know, I end my shows with treat people how you want to be treated. Be the change that you want to see in the world. Be the glitch that you want to see in this matrix. Because that's what we have to do. And
guess
change,
what, Chris?
It starts with us individually.
Exactly. And guess what? We don't have to agree on absolutely everything. But what we're agreeing to is retaining our personal sovereignty. Freedom is not free. Convenience is not free. And things are always sold as how convenient. Hey, put a chip in your hand and you'll never even have to touch your wallet or your phone. You know, it's just how convenient is that?
Right.
Well, they already have the tools to implant chips and people are volunteering. I mean, maybe it's because I'm old and I don't, but they're volunteering to have this stuff implanted and they can control how you think and how you feel. So forget the psychological movement of and perception management of how you think and how you feel and how you move forward. Let's go more directly. That world scares the Hades out of me.
I agree. And before we wrap things up, because I did kind of go a little bit over and I want to give you a chance here to talk about ITM trading, I want to share a quick quote that I like to read periodically, especially when it's fitting. This comes from Mr. Benjamin Franklin. He had these wise words that had to do with those who would give up essential liberty to purchase a little temporary safety deserve neither liberty nor safety. And unfortunately, I think a lot of people are in that category. You know, the more of us, I think, that are awake, that we can help wake other people up with that positive impact, the more that we can get those numbers up, the more that we can make this change be. Because we definitely, the system is stacked against us, but we have the numbers. It's just a matter of coming together. And I've seen so much division just in my lifetime. There was so much division that had built up before I was born in 1975.
Yep.
I mean, there was so much division, but there's so much more that's happened since then to keep us divided. And it's
exactly
the saying, united we stand, divided we fall. It's spelled out to us, but we can't see the forest for the trees, unfortunately.
Right. And that's why I said, we don't have to agree on everything. I mean, a little bit of good debate is beautiful because then you can listen to all the sides and you can see what feels right for you. But one thing that we do agree on is how important our personal sovereignty and the community is, because they've done a great job of transferring your wealth. And if we allow it, we are in a total surveillance economy, and everything you do is controlled. Everything, what you can say is going to be
Be a
limited.
good citizen.
Exactly.
Just
Or
go
you
ahead and
won't
get
be able
George
to buy
Orwell's
food.
1984 and read 1984, read Brave New World from Aldous Huxley, and kind of get an
Yes.
idea of this future that's coming if you don't do something individually so that we collectively can change this.
Right. And I'm glad you brought up A Brave New World, because they've been working on this since they started the system in 1913. And I believe that was written in the 20s somewhere.
Somewhere in
The
that, I believe somewhere in
1920s.
that time frame.
And, so these things, Ernest Hemingway, how do you go bankrupt? Slowly at first and then fast. If they do these things too quickly, you notice, and they don't want you to notice, because once you realize the game, you make different choices. I have made different choices, and I have made the choices with food, water, energy, security, barterability, wealth preservation, community, and shelter, because these are all the things that we need, frankly, to protect our families and even others, because you need a variety of skill sets in a community to make things really work and happen. But I have my bug out location. I have a food forest in the center of the city. I mean, we've
I
got to
def
pay attention to this.
Next time I get you on, and I'll try to schedule something with Jacqueline. And again, I appreciate her doing this for such short notice. I want to focus on this community stuff that you're talking about, and we can obviously do some promoting of ITM trading. I just think this community stuff is very important, and it's probably one of the most
Everything.
important things people need to talk about, because if you think about us as individuals, as people throughout history, the way that we have survived is in tribes.
Exactly. Look,
And
one person can't do it all. And
right.
I have so many people that think that I'm the one that's out there doing all the gardening and building and all of this stuff, and I'm not. I've just been fortunate enough to be able to surround myself with community. But not everybody has that opportunity. But yet, they might have the ability to lay irrigation, right? And somebody else might have the gold and silver, and somebody else might know how to do, to install plumbing or grow food or weave fabric or whatever it is. It takes a community, and any talents that you possess are barterable. And if we can come together in community, look, I've been working on this for so long, and I'm more ready than probably about anybody that I know, to be honest with you.
I didn't check out the website, but do you have a new community-based website?
I do. It's thriverscommunity.com, and it is global. And in there, you actually get direct access to me every week. But we're working really hard on building this community on both a local and a global circumstance, so that we can come together. And a lot of the events that I did, I was in Australia, about a month and a half ago or something like that. I was telling you.
What did you say the
And
website was again? I'm sorry.
thriverscommunity.com.
.com. Okay, cool. Because I'll get that pulled up on screen here, because I'm going to check this out.
Thank you.
Yeah, no, I
And
think it's really important. And I meant to check it out before, and when you brought it up, that's why I wanted to ask.
yeah, I mean, arguably, in my opinion, community is the single most important thing in that whole mantra piece, because, we need each other to get through this. And we are, frankly, all in this together. There you go.
Yeah, I'll put a
So
link to this down below in the video description so people can check this out. Do you want to, because I know you're
please.
kind of limited on time. Do you want to share anything about Thrivers Community and then get into what you guys offer over at ITM Trading?
Well, sure. Again, the Thrivers community is about people coming together. If you have these great skill sets, share them. If you're learning, then we're all there to support your efforts. We've got local communities, and we're working on creating that global community. And it's based on the mantra, so that you can be as independent and self-sufficient as possible. So that's what we do on both Beyond Gold and Silver, but more specifically, Thrivers Community, because then you get like access to me directly every week and lots of other things,
Okay.
So it's really important, in my opinion, and I've been doing this on some level my entire life. The community part of it is arguably the most important part of the mantra, so that you can come together to support each other. It's just critically important. And then on the
Do you
other
have these
side,
other two pages linked though? Do you have Thrivers Community and Beyond Gold and Silver linked in any way? Because I know this is more of an
we think
ITM
so,
thing.
don't we? Yes, we do.
So if I click community, maybe I'm just
Um,
wondering. I didn't see it on the website, unless
I'm
it's
not sure because that is not what I do.
no. I know, and I'm
That's
sorry for asking
like,
you like crazy questions.
that's
Okay, let's
okay.
move.
You
But I
can
will have
ask me
links
crazy
down below, and if
questions.
people check out like the playlist with all your previous conversations, we dig into Beyond Gold and Silver in pretty in depth in previous conversations.
Right. I mean, gold and silver enables your, liberty and your financial freedom because it is completely outside of the system, decentralized, and nobody's got to say it's got value. It has full market value, so it has full functionality. On the ITM side, that's where I try my best, and I'm always trying to get better at it, to translate financial noise into understandable language. Because I've been a stockbroker, I've been a banker, I understand the language, and I understand what they're doing. So there's we're always putting out information every single week. And we're also expanding, in the process of expanding our news desk. So we have Taylor Kenny now, who just comes out to give you a basic, quick 10-minute, because that's hard for me to do. But she does a great job. She does a great job of it. And we have others that are coming in that I can't talk about yet, but I'm very excited about this.
Oh, so you have some other people that are going to be coming to join you guys.
Yep.
Awesome. Well, I have to look
So
forward to learning about that. If you guys ever need a cryptocurrency correspondent, I know how much Eric loves the Bitcoin.
well, look.
Well, at this point, he should love Bitcoin, though. And I mean, I would love to bring that conversation up again, revisit it with where we're headed, because I still look at Bitcoin as one of these answers to get away from things like central bank digital currencies as well.
Well, we can visit that.
Yeah.
We can look, I have no problem changing my mind when I get the facts.
I get it. No, I totally do. And maybe, me coming out there to visit and us talking privately before we even
Yeah.
record something, I think might be beneficial.
Yeah.
But so I'm going to
But
encourage
I
people to
don't
schedule
mind.
a call with you guys.
Yes, but I'll tell you the truth, Chris. I don't mind having any conversation on air. You can
I know.
ask me anything, and I'll tell you, I'd love to sit down with this Paul Krugman. So if any of you guys know him, I want to do a sit down with this.
Yes, I heard you mention something about that. Was that on
God.
what show was that on? Was it on the headline show you did today, or was it
I don't remember.
last week?
But he comes out and said, "Don't worry, inflation is conquered. Let's chat. Really, let's chat." So,
Yeah. Well, I mean,
okay.
maybe he's I think you might have insinuated he might have been what's the word I'm looking for? Incentivized for putting out a statement that might have had some effect on the markets that the people who's incentivizing them want that effect to have on the markets be.
Well, I mean, Wall Street is coming out and expecting great third quarter results, and based on the consumer. Are you freaking kidding me? I mean, we could go on for hours.
We could. So I'm going to have a link down below for the ITM Trading website. I encourage you guys to schedule your free strategy call today. Make sure when you guys do that, you let them know that you guys watched on Rice TVX, Rice Crypto. Let them know Rice sent you. I'll have a link for the ITM Trading YouTube channel, for beyondgoldandsilver.com, as well as the Beyond Gold and Silver YouTube channel. And I'll also have a link for the thriverscommunity.com, which I plan on having a deeper dive conversation with Miss Lynette in the future. Lynette, do you have any final thoughts? Again, I really appreciate you taking the time to do this on such short notice. Anything you want to add that we haven't talked about, or any final thoughts you want to bring before we do close today's conversation?
Yeah, just get it done. Please. We are running out of time. People think we have all the time in the world, just like that, Well, do we have 3 months? I can't guarantee that, and nobody else can. If you are thinking that, you're living on hopium, and hopium is not going to save your butt. I'm sorry, just get it done. I do not like the action in the foundation. And if you were in a house and that foundation starts moving like that, are you going to stay in that house or are you going to get out?
Agreed. And there's so much other uncertainty as well, which could cause even many more problems. I mean, we're looking at potentially supporting two separate wars, which would mean
Well,
that we
isn't
would
that all
definitely have to
part of
print
it?
more. Yeah, well, we would definitely have to print more money, which would definitely add to the inflation problem and definitely make everything that we've talked about much, much, much worse. So, yeah, people pay attention. Before we wrap things up, I encourage you, as always, to be a blessing to others. Treat people how you want to be treated. Be the glitch that you want to see in this matrix. Be the change that you want to see in the world. And then also, want to make sure you guys are taking advantage of this mantra. You need to make sure you're stocking up and taking care of these things: food, water, shelter, energy, security, barterability, wealth preservation, and community. And until next time, I encourage you, practice change.